let me get on with the meeting here. Uh, I will turn off my video, and let me turn off my video. And if you can too, that will save some of the bandwidth. And I will share a screen. Let me share a screen here. Hold on. Okay. I'm going to share my screen. All right. And all right, so people should be able to see my screen. I'm going to make this so that it hides a little bit. Okay. So this is the agenda down in the lower left. I don't know if people can see that, but I was going to start by going through the previous month's trading, what worked, what did not work. I had some issues with various exits on some of my strategies, and so Scott gave us a pointer to some stuff from Interactive Brokers. So I'll talk about that a little bit. And then I wanted to take a quick poll on some trading. I wanted to see what people were doing, what people were trading, and what was working, what wasn't working. And then I wanted to do another poll, which is to poll people to see if we should continue the Zoom meetings exclusively or be meeting in person. So I just wanted to get a sense of what it is that people are interested in here. And then I was going to go into two different sections here. One was to have breakout rooms, and if Scott and Stuart, or Jack and Stuart would be around, maybe we could have a couple of breakout rooms. I have assigned or have allocated some breakout rooms, and we can make those things whatever we want before the meeting. So you got to do that before the meeting is all set up, and we'll see how this all shakes out. And then I have, at the same time, I was going to show a Black-Scholes options pricing model. So there's probably most people here, or a large number of people here, are more interested in stocks. So I was thinking I was going to have a breakout room more for the stocks, and for people that they're not interested in Black-Scholes models of options, we'll let them break out into the other rooms, and then we'll rejoin, and then come back and say, well, what do we do on Monday? And take a look at the excess profits calendar and open it up for discussion. So I hope that is okay on the agenda. I didn't know if anybody else had any other things on the agenda that they would like to address, but send it to me me or one of my co-hosts. Co-hosts are Jean and Jennifer, and we will try to address those as necessary. All right. So previous month's trading, what worked and what didn't. There's a lot of different people trading. We had, from the last meeting, a group of us put together a little team, people that were trading the BBIC. Beth, could you turn off your screen there? It's a little distracting for me. Thank you. Okay. And so the shared, people can see this here now?
Yes.
Okay, great. So we had 4 different people that have done options trading in terms of iron condors in the past. Scott, Tim, Bill, and myself. And so we had this scheme called BBIC, Bill Burmeister's Iron Condor. And each week, we went through this 3 weeks, and each week what we did was each person was doing it from a different standpoint. Everybody's style is different. So Scott started out first week, he was doing 16 delta for his short positions, and then he did a 25 delta, 2.5 delta long, which is way, way out. And Tim was doing not Tasty Trades, it's Tasty Works. Okay, Tasty Works. And he was trading low 20 deltas and a $2 wide spread. So each person was trading something a little bit different. And I have 4 different accounts. Each account I was doing something different. Um, in my account, I was trading with automation. My preference is to do automation. In the process of doing that, my margin account, everything went off without a hitch. I did great. These were the automation I created in 2017. And then I did some automation in my Roth using the same automation. And when I did that, I found there was a bug, not in the code per se, but in TradeStation. They would not allow me to put out a short call in the Bill, can you mute your screen? Take your video off. Okay. And then I also did in TOS, since everything was in TOS, was manual for me. I did that, and I did it in a simulation account. But then by getting all these things together, what happened is that these TradeStation ones, the first one went off 6:35 without a hitch, no problem. No, and then this one here had a bug; it wouldn't fire, so I had to fiddle and fart around to try to figure out what the problem was. And then I ended up going to the thinkorswim, and I was able to get a trade off there. And then finally, a day late, I decided I was going to put on another trade in my TOS simulator account, which, just give you a preview, the putting it on Monday or Tuesday didn't matter much. Doesn't matter much. You don't lose much theta decay to theta decay. And then what we did is we went from week one to week 2. We took a look at what we were doing, and then Scott tightened up some of his spreads. Tasty Works here. Tim was doing his Tasty Works stuff. The same thing. He wasn't changing any of his stuff per se. And then Bill and I moved to SPX. Although I did hold here, I tried to do some SPY. So there's some really cool things with SPX that you can do that are not available on SPY, and I'll talk about those in a few seconds here. And so each step of the way was a refinement, right? We went through week 1, week 2 refines, more refinements here. Scott then told us some interesting things about just before this is between weeks 2 and 3. Scott was telling us about some SPX morning settlement issues, and also we were talking about some Monday and Wednesday expiry. So you can actually trade these things on Fridays, Mondays, Wednesdays, and then you have this oddity, this AM expiration settlement, and that is something I'm going to talk about a little bit as far as we go. We'll see how it can go wrong. And also Scott also showed us some of the interesting things that he's trading using interactive brokers on his orders. So there's some unique orders that are available at interactive brokers that I have not seen anymore, and I appreciate Scott's insights in those. And so Tim also had some really interesting settlement issues, or raised some settlement knowledge by telling us about this SET index. If you take a look at their thinkorswim platform and type in SET there, you'll see that it basically just says this is the price that the settlement price every day, and that's associated with the morning settlement of SPX. This may not make any sense yet to people. Stay with me. So Bill was doing TOS and SPX with even a Wednesday's expiry on week 3, and then I was doing SPX automation. After hearing Scott's presentation about SPX, oh man, I just said this is the way I have to do it. I have to trade SPX and not necessarily SPY. But each individual person is different. So here are some of the results of the trading. So this stuff up on the top here was just basically the same kind of thing from the previous one. What we learned from week 1 to week 2, what changed, and week 2 to week 3 is up here. Then these are the actual final results of the trading. So Scott's SPX trade, he made a 7% return on capital on the first week, and then Tim did a 32% return on capital using Tastyworks. And he's basically trading a delta just below 25 and with a $2 spread. And Bill, he had lots of contracts, and when we did the actual trade, he actually lost. So if you want to learn about the details, you have to contact each individual person, because there is a lot of things that went on in each of these trades. My automation worked pretty well on these. I lost a little bit of money on the Thinkorswim with the manual trade. That was just due to an exit issue on that. And then the second week, Scott tightened up his spreads. So he was wider here, and now he went narrower. And so he basically doubled his return on capital, because the price basically went down the center. And then all of us basically made the price action basically went right down the center of our short strike channel. And so we went, you can see that 40, 45%. Then the following week, we were looking at AM expiration. So there was a huge number, over 20,000 contracts at where we would typically put our short strikes on SPX on the AM expirations. And so that was going to be an interesting experiment for me anyway, because I did the AM expiration here. I think I was the only one that did the AM expiration, and that was a big loss, a lot of big surprises. This one here, I'm going to talk about that a little bit more. This one, the most you should ever lose in a BBIC, if you're making like 40 to 45%, you should maximum lose 55 to 60% on, if it absolutely went against you 100%. This one was 146% loss. Horrible, horrible loss. And I will explain a little bit more about that on the subsequent slides here. So hopefully people are keeping up here. This is the one that went horribly wrong. So this was a BBIC trade. This was the short strike up on the top. This is the long strike. This is the short put. This is the long put. And so what typically happens is that when the short put is violated, the price window is violated, it's supposed to send a purchase, buy back the long strike or the short strike, buy back the short strike. And when it does, it should have bought it back somewhere around here. This price, this bar here shows the price action on the short strike. It was whanging around. It went from almost zero up to over 50 bucks. And when I did my market order, my market order was $42. So even though this was the largest open interest, 20,000 contracts, there was a major spike. And the bottom line is, do not do a market order on any of them, even with these huge, huge open interest. If I would have known what I know now, I would have put a limit order on my exit. So I would have put a limit order that's double my entry price. So my entry price was down here. This is the price that I sold the put for. That's the initial trade price. And I should have put a limit order as to exit the position. If it went above this, it wouldn't exit. That would have been fine. I would have had just a 52% loss on an option trade. That's still okay. But I got worse than that, because when I did the market order, it filled not down here at 26, it filled up here at 42. That was because I did a market, not a limit order. And then what's supposed to happen is that I'm supposed to have a limit price on the on the long strike of $26. If that would have happened, I would have basically made my 40 some percent gains on that trade. Okay. So all right. So okay, so that's the actual limit. So that was a major faux pas on my part, but it's one of these things that it cost me a good penny, and I will learn that, and it will be in my data banks indelibly etched forever. So this was the major issue on that last one, which was there was an FOMC trade, right, announcement, and it was the quadruple witching. Yikes. And so all of us had a loss. I suffered more than the other guys because of the various issues that I ran into. This is the definition of the quadruple witching. It's basically all sorts of things. Option contracts expire, index options expire, stock and futures expire, and index futures expire. All of them happen on the same day. And this is notoriously fraught with volatility. And let me show you. Oh, so this is what actually happened. I crossed it out. This is what should have happened. If I would have done my new rules, implemented my new rules back then, it's live and learn, right? Exit with limit orders, not market orders. I would have had a 57% gain here, which was basically what I originally targeted. And then this one here, I needed a better exit condition. This one was just a bad exit condition, and I would have had a loss. I still would have had a loss of 4%, but that's not too bad. And this one here would have had a loss of 3%. And then instead of losing 67%, I would have made 22% if I would have exited on the Thursday before. I was watching the premium on this, since this is something I've never done before, is watching the SPX AM expirations. So the last trade happens Thursday, and the valuation doesn't happen until the all of the S&P 500 stocks trade one trade the subsequent day. And so this didn't actually, I didn't know exactly what the price was going to be until after 9 a.m. the following day. But I figured it couldn't go that far. You know, it can't go there. It can go there. So this was the AM expiration. So part of this explanation here is to caution other people if they are looking at index trading options, to be very wary of what could potentially bite you. The red dashes are where the price was the day of close, on the close of the Thursday. But typically in options, anything below that should be zero value. There should be no value here. All of these options should have no zero value. And subsequently, the ones that are above the call strike, all of these should have been zero. And this was, I'm scratching my head. Well, I figured, well, maybe it's going to go up, 10 points or something. That's okay. But this, I took the data all the way back to 230 points down from the close, and there was still value in those options. So if anybody can explain to me how this can happen, let me know. I would have been better off exiting the prior night. If I would have exited out here, everything would have been fine. I would have been okay. But then to the risk that I had never seen overnight, um, it was evidently priced into these options already. So just if somebody knows something about these things, please let me know in the chat or what have you. Okay. And
I
then,
mean, markets, we've
yeah,
seen markets do that back in 2007 and 8 and 9. Seen huge moves. Right.
huge,
It'd be fun to
huge.
do a study. Be fun to do a study of the typical close Thursday close, the Friday open on option expiration. The Friday of option expiration week,
Yeah.
or at least on the quad on the third week, the monthly close.
Ken,
Yeah.
this is Gene. Did you take into account the skew? The put
I
call
had
skew?
I had never seen anything like this in my entire life.
No, this is a record skew that they've got right now.
Yeah. So I have never seen anything in this neighborhood. So I'm presenting this as a cautionary note, and for some people, so people can take a look at this. And Scott's points are well taken. I don't know how I could actually see this from, you said 2007, Scott. That's a I
During
don't
the
have.
financial crisis, there were huge moves.
There are huge moves, but the market was basically going sideways for the last 3-4 weeks.
True.
So I could see if the volatility is way up, but the volatility was extremely low. The implied volatility here. This is the implied volatility calculation here. It's below 10. This is way below. This is way below 10 here. Like, there should be nothing, in my opinion, but obviously there's something that I do not understand. So
Ken,
yes, Kirk.
as Kirk, you are familiar with the set price declared by the CBOE on SPX?
Yeah, so that's one of the things that I was talking about here. This one from Tim. He was telling us about the set index,
Right. Yeah.
and that I didn't realize how important that was, and I didn't think that there would be such a major gap the following day. But yeah, that's a priori, right, after the fact. So we could take a look at that after the fact, but you don't know what it is the day of expiration. So my bottom line is I should have just gotten out of this. There's just no way I should have stayed in this trade. When I see something, so there's two different things. One of them is the option prices were going right down the center. The BBIC, there was no gain. You could have entered the BBIC on last Friday, last Monday, last Tuesday, last Wednesday. You would have gotten the same price. There was no change. And that to me is another indicator that, hey, this should not happen. We should see a nice ramp. It should start showing profit. You should start seeing theta decay. Larry Williams one time said, if the market is going sideways, price is going sideways, or something you don't understand is going sideways for more than a few days, there's something that you do not know, get out of the trade. And he's on one side of my shoulder, and then Bill's on the other side of the shoulder, and Michelle's on the other side. So it's like I got all these arguments going on in me, and it's like, which one is the correct one? And Larry Williams, bless his heart, he's absolutely right. I should have gotten out. In which case, I would have gotten a 22% gain on that trade. So it would have been good. It ended up being pretty bad. 67% loss. So anyway, so here's another one. So this is some differences between the SPX is cash settled. As opposed to the SPY, if you hold that, you can actually be assigned. You can be assigned during the week. You can be assigned after the close. And some of us have been doing some pretty larger and larger trading. And so getting cash settled eliminates a lot of those risk factors. You don't have to worry about the assignment risk on it, the potential early assignment risk. And also with SPX, you only have 1/10 the number of contracts you have on SPY. So lower commissions, you have a tax advantage here on SPX, 60/40 tax advantage, or you may or may not get a 60/40 tax advantage on SPY. Over the last few years, I've been trading options on SPY, and the trade station has been reporting this as an index for me, so to the IRS. So I get a little bit of a tax advantage. It's not much because most of my trading has been done now in the Roth IRA or in some sort of IRA function. So that's not much of an issue. So anyway, so you can see the difference in price, $2,000 versus $200 for a BBIC for the margin. So anyway, so that was the end of that. So that was showing you what worked and what didn't. And let me show you some of this. So Scott's been trading Interactive Brokers and maybe Tastyworks as well. And he showed us this chart, which shows all the different trading that you can do, all the different exits, entries, orders, and it's amazing. So one of the ones he pointed out is we had the people that are trading Thinkorswim typically do what's called price discovery. And it looks like this particular one, snap to midpoint orders, is a similar thing to a price discovery function already built into Interactive Brokers. So in all discussions that we've had with this group and with Scott, I'm starting to think about more about the viability of Interactive Brokers for my personal trading. Black-Scholes. So what you do is click on that link. Let me go back there. So you click on this link in excess. Well, this is in Excess Profits or in Ken.Excess Profits. You click on this link here, which says Black-Scholes option pricing using Google Sheets. You want to make your own copy of it. So I didn't want people editing the one that's already up here because it's a template. So you basically click on that and you say, we should say you can't edit it, but then the only thing you have to do is just say save a copy or make a copy. So I'm going to make a copy of that.
Ken, could you provide the link in the chat to this spreadsheet, please?
Say it again.
Could you provide the link in the spreadsheet? I tried to type it in manually and didn't find it. I must have did some typing.
Go to excessprofits.com and go to presentations, and you will see the first line there is in 2021 is the link to it. Okay, so this is it. Let me know if you can't get there, Rolf. And then so this is basically the Black-Scholes model. So the Black-Scholes model is, if you look at it, it's multiple dimensions. It's nearly impossible. Most people look at 2 dimensions. You see a plot, XY plot. 3 dimensions is okay. You get to 4, 5, 6 dimensions, it becomes impossible for the human brain to comprehend that, for most people to comprehend it. Well, if you look at the Black-Scholes model, it's actually 8, or in some people's minds, 10 dimensions. It's got the underlying price, you got the strike price, the time to expiration, and you have the implied volatility, and there's also the risk-free rate, which is basically the bank rate. So then you also have the derivatives of those things, right? You say, okay, how does price change? What happens when it changes? What's the strike price? What happens at different strike prices? So if you look at that, it's really, really complicated. So over the years, I have tried to use the Black-Scholes model, which takes all those things into consideration. And you can change any of these numbers in the yellow, and it will figure out all of the fundamental calculations. So you'll actually come up with a value, a call option. Let me make this bigger here. Come on, bigger. bigger. Let me make this a little bigger here. Zoom, 125%. And so it takes these inputs, it comes up with these intermediate values, and then you end up with a option price. There's intrinsic value, extrinsic value. You can see the delta. You can see the gamma, all the different functions, all the different pieces of that option strike. And by changing any one of these, you can alter all of the different variables down below it. So here's an example. So if you want to say, okay, I'm going to change something here, but I want to see what this starts with, and I want to see how it changes. So you can basically say copy, and you can say paste this out a few times, right? So you can say paste it, and it basically pastes that same thing. Now, if you say you want to see what's going to happen if you change from the days to expiration from 5 to 4, right? So you go 4, 3, 2, 1, right? And then you can say, okay, well, what happened to the option price during that time? Look what happens. So it starts out at $15 and it goes down to $8. So by tweaking this, by copying and pasting, doing anything you want to do with this, you can explore changes in volatility, you can change it with changes in risk-free rate, change what happens with the current stock price. So I do this regularly by just copy and pasting across. You can basically extract any piece of information you want about the volume, the call prices, put prices, the deltas. And here's an example that I used just recently, and it is the price model. I'm looking 5 days out, and I wanted to see what the let's see, the current price is the same, right? So this is all the same, 4230. And then I said, well, what's the exercise? So this is basically the strike price, right? So what happens when I go from a 4220, 4240, 4250, 4260, and how does the option value change? And so you can see the option value changing depending upon where you are in this process. So hopefully this is making sense to people. So then you could say, well, okay, I want to plot this. I want to see what does it do. I want to take a vertical, for example, right? I want to look at a vertical, and you could basically take that same spreadsheet, the same spreadsheet model. Let me get rid of all these. Delete cells, clear. Let me get rid of this here. Delete values. You take the same model, you can duplicate it, and then you could hide various levels. So if you don't want to see this stuff here, you could basically just say, just hide this, right? Just say hide these rows, and you only want to look at delta. It's a way to simplify the spreadsheet a bit. So that's what I did here. So I copied it across. I said, okay, I'm going to look at the expiration days, because I was looking at SPX. And I was saying, well, how should XPX change with days till expiration? So days to expiration, this is time in percent of the, or parts of the year. And so all of those are the same. And the only thing I did was I changed the strike. This should have been the strike change. No, the strike is still. So these are two different strikes. This is the 42.75, 42.85 strike. And I wanted to see what happened with price action. So this just shows what happens as you go on. As the price stays the same, how does it decay over time? And how does the resulting price of the vertical change? So that the vertical is basically the difference between this and this, right? So this is the value differential between those two. Looks like a log scale there. So You can also look at it from other standpoints. So if you create yourself a large chart, then you could basically create something that looks at, the call option price versus the underlying price. You can look at the delta changing on it. So all of this comes from this one model, right? Let me just expand this out here. Just looks foreign to me on hydros. So, okay. All right. So that, any questions on this? Or is this too complicated? It's over everybody's head. I don't know what people, if anybody here other than myself uses the Black-Scholes model to do investigations on, you can do investigations on the individual strike, you can use verticals, you can use iron condors, almost anything using this one option pricing model.
Yeah, Ken, I have a question.
Yeah, Rolf.
Black-Scholes is usually solved by an iterative process. Obviously, you found an analytical solution here. Do you have a reference to that?
To this? Oh, this is this just goes back to fundamental math. If you go look at Investopedia or any of those, you'll look at how you calculate each of these values, and or you might even find it on Wikipedia. I did this so many years ago, I couldn't tell you where this came from, but you can do a correlation with it, put some numbers in there and see if it actually comes up with exactly the same thing as you see on Thinkorswim, TradeStation, or anything, and it comes to within just a couple of percent. But yeah, so that's what I was trying to show here, is that if you just take these things here, forget about the underlying. I mean, you can go and delve into the underlying on these things and figure out what all the subtlety things are. But you just basically copy and paste them across. You can copy and paste them vertically. Multiple spreadsheets are huge. Thousands and thousands of lines. So you can create some really complex analysis using this model. So when this meeting is done, I will post the YouTube video on my site, ken.excess profits, as well as Brian's Excess Profits website. If you go to Excess Profits, you should see the same Excess Profits. I think I didn't put the top one on there. I didn't put the video information on yet, but you should be able to get at the Black-Scholes model here. Anyway.
So we're back.
Oh, okay.
Scott's room we got kicked out or closed out.
Okay.
Yeah,
All
we're
right.
back too.
Okay,
Yeah.
good. I'm trying to figure out how to get everybody back together. It looks like you guys had some really good attendees in each of the rooms, which is excellent. So I'm anxious to see. I hope that you guys were able to record it so that I can take a look at it and see what happens. Because being a host, I don't get to see any of the stuff that's going on behind the scenes. Anyway,
We're just talking about behind your back, Ken, about you. We're just making fun of you. No.
Yeah, I can imagine. All right. So one of the things that I wanted to do at this point is I'd like to get to the point where we say, what did we do on Monday? But before we do that, I would like to send out a poll. Last time my polls were a fiasco. Let me see if this is going to be any better. I'm going to launch a poll, which is the trades from the previous meeting. You should be seeing a calendar, right?
Yeah.
Yeah.
Okay, cool.
Yeah, we see it.
All right, so now I'm going to launch this poll, see what happens here. Can you guys see that? I wanted to see what people were doing.
Yeah, I'm getting a poll.
What people were doing this past month, if they actually took any of these trades that we had on our calendar here. And interesting.
That SPY Friday trade But I mean, Friday was great. Let's see how the rest of the week goes.
Yeah.
Well, when does that trade start? Is it Friday at open or Friday at close?
It was this Friday. I don't
Yesterday.
remember any particular time on Friday.
Okay. Well, I did that, and we actually went over that trade in our room.
Oh, you did?
Yeah.
Oh, okay. Cool. All right. Let's see here. So, wow. So everybody complete the poll. So this poll is working, right? Everybody, Grant, is
Yeah.
this poll working?
Yeah, it's worked fine.
Okay,
Yes.
good. Good.
Yeah, you're getting responses. I see quite a few
Yeah.
responses there.
Yeah. Okay. All right, good. All right. Well, I am going to end the poll here and I will share it with people. If looks like that's good enough. And okay. And I'm going to share the results. I'm going to download this here first myself here. Oh, I'll have to do it later. Share results. So these are the results. You should see it on the screen. And most people didn't take any of the trades. So
I wasn't aware of the Tesla trade. What is that?
so if you looked at the calendar, group calendar, and you went back to here, there's a Tesla seasonal trade. Can you see that?
Yeah, I see that.
Yeah. So I put it on. I think it was the subsequent Monday. Actually, I saw this coming up, and then what I did is I basically just set the stochastic on it, and the stochastic said buy. Let me show you. Shoot, too big here. Let me shrink it down here. So I use the stochastic as my trigger point. So I see something that says, hey, this is possibly a good trade. And then I say, okay, I just basically enable it. And I say, here's Tesla, and it triggered here. This is the buy signal. And that's what I used as the buy, which coincided with the seasonal. And so I just said, okay, cool. That works. Okay. So that worked for me. And somebody said there are 4 people that took the trade, it looks like.
And where do you get these seasonal tendencies from?
So all over, any place that I could find them.
Oh.
So you look back and you'll see some of them came from Larry Williams. Some of them came from Jake Bernstein. Anybody that has a seasonal trade that goes back 10, 20 years that is approaching 100% probability, or one that has extremely low drawdown. If the Tesla one has extremely low drawdown and it went back over 10 years, and you can look at the data. So if you click on the, if you look at the calendar and you click on that, you'll see the details, right? You can see all the details.
Yeah.
And you get,
So I have the reason I was asking is I have a tool that finds these. I use TradeMiner.
Oh, okay.
Oh,
Yeah, that would be great.
And I have
Scott,
tons of these.
oh, good. Hey,
I don't know if you want to see them or not. I have futures, Forex, and stocks.
So what would be cool is to consolidate them somehow, either as an email or as something to show people what's coming up for the next month's trades. I put them into this calendar, and then they're there forever, every year. And for me, it basically sends me an email that says, hey, you've got a calendar trade, Tesla coming up here, go and do it. And I have a go away in May one. And the polls showed that some of the people, 4 of the people ended up doing the go away in May. So that, to me, I'm flat. I see that trade, and I basically just say, I'm not going to bother doing any kind of long-term positions. I'm going to only do short-term things, which are going to be only swing trades or like what you're saying, the seasonal trades there, Scott. But
Yeah.
is there a chance that you could, how do you want to do this? Share your
Well,
screen?
I can
or
share my screen and just show you kind of what it looks like. And if you guys want more, I can maybe do a presentation another time.
Is that okay with everybody?
Sure, love to.
Okay.
Absolutely.
All right. Let me stop and let you share it there, Scott. You should be able to share your screen.
All right.
But while
So
he's-
this
okay,
is
go
a tool. You guys see my screen? TradeMiner
Yeah.
Pro.
We can.
Okay.
Yeah.
So this is a tool I bought years ago, and I haven't leveraged it as much as I probably should, but I'll just show you what it does. So right near up here, you have these different tabs, and it's like it's a process, a workflow. So step one is you scan. So this is
Hey,
for the
Scott,
month.
can you make it a little bit bigger?
Good by
Much
me.
better. Yes, thank you.
Okay. So basically what you do is you start with the scan up here. You say search for trends in the, you can either do it by month or symbol. I just do it by month. June. So you have to do this every month. And then say find trends that have won at least 80% of the time. You can change the percentage to 90 or whatever. 80 is good. Let's do 90 because it's too many signals. It's kind of overwhelming, too many signals. Showing both bullish or bearish or both. List trends that last at least length trading days. So I want the trade to be at least 5 days long, let's say, but no more than 21 days. And you can filter that, change that. Find at least 10 years. I want at least 10 years of history. So let's do search. Yeah, it takes a little while. Not too
So
long.
Scott, did you pay for this?
Yes. So I think I don't know what they charge now, but I think I pay like $300, and that includes 1 year of data. And then every year I have to renew. I think it's about 120 a year, 180 maybe. I can't remember what it is a year. It's not bad.
Well, yeah, if you could make that up in one trade. And
Yeah, well, it's one
that's
trade.
what I saw myself.
So I just looked it up. 179 is what they're asking.
Okay.
Which isn't bad, yeah.
I mean, it's reasonable. So it should be coming up soon. And I'll just show you how I use the results. So the score, if you're bullish, you want it to be, so the score is between 0 and 5. So what I do, I sort by score. And so here are all the 5. These are great. So here's, for example, Charter Communications. So if you buy on the 28th and you sell on July 15th, 11 years in a row, it won every time. Average profit 5%, risk reward 1 to 4.5. Not sure what that means. Oh, I risk 1, I made 4.5. And then here's down here, this chart. This is what it did every year. These are P&L. So in 2010, it made as much as 5%, but at the end of that, July 15th in 2010, you made just a tiny, fraction of percent. But last year, for example, it went up to, I'd say that's about 8%, and it closed there. And so you made 8% on July 15th. And the max drawdown was 2.43 on that. Let's see.
That's pretty cool. They actually have confidence intervals on those. That's really
So
nice.
they have statistics here on drawdowns. There's a bunch of columns here. You can export this to Excel, all these columns. Max gain, average drawdown, 1%. So pretty low drawdown. So yeah.
Very nice.
And then let's say I want to do, I usually look for 5s and 4s. So let's say I want to do all these 5s. Let's do,
So could you go more than 10 years, or what's the maximum data set?
yeah, you can go 20 if you want.
Yeah.
You type in whatever number you want.
But I don't know how big their data set is.
Oh. Yeah, I'm not sure. I think they go back as, a century, whatever's available. It's just daily data. It's not a lot of data.
Yeah, why don't we do 20 so that 10 years have been just up markets. So let's see how they do in down markets too.
All right, let's do 20. But you're not going to get Tesla or any of those newer stocks. You're going to
Right.
get IBM and
Yeah.
Coke. That's the problem with going too far back.
Scott, are you actually trading this yourself?
You know, I have not been using this tool. I want to use it more. It just takes time to, I've done it before. So what I've usually done, and I did make money using it, but it was a very bullish period of time. And so what I was doing is I would find the beginning and end date, and then I would just, like Ken was doing with his stochastics, is just look for a bullish signal within that period. Now they're not very good. There's no 4s and 5s. The best is a 1.84.
Yeah.
I think it's just too much history. They're too
Oh
far
wait,
back.
just click on that. I mean, that's not bad. Look at that.
Well,
Look
yeah.
at that curve on the bottom. Just like 2 years, or just like that's not bad.
Yeah.
That's pretty damn
I
good.
mean,
You know, that was just the financial. Wow, that's pretty good.
What's
And they have
what's the score show? I mean, this is showing like 91, 92% win ratio. Why is the score so low?
because we had I don't know, we had a couple losers, and some of the winners aren't that great. You know, like back here, they're just 1% maybe. That's not that great. Maybe it's a relative score relative to other setups.
Okay.
Wow, take a look at IBM there. Good Scott, can you click on IBM?
Let's see, where's IBM? Oh, right there.
Right there. Wow.
So even last year, it made, you know, 5. You could have made up to 8%. So what I used to do is, I would see this. I would kind of eyeball. I'd say, okay, on average, I look at the high of all the bars. And I say, on average, I can maybe expect to make about, at most, on average, 5%. We tend to hit this 5% line a lot. Not always. Maybe 4% would be a better expectation. So what I'll do is I'll buy call spreads. I'll buy like either an in the money or at the money call, and then I'd sell. My short call would be at plus 5% or plus 8, you know, somewhere above where it would normally go, just because I don't want to hit that. I just want to get the credit, not go beyond that. That's kind of how I used it.
But so you're looking at a 9-day trade here, so that's just you could easily with a 4% gain, you can get 100% return on capital just buying the individual call. Wow, that's really great.
Yeah, I like the 10-year of history. I know it's been a bull market for 12 years, but the market's also changed. So I'd like not to go too far back on purpose.
Okay.
But Scott, it said bearish. Why would you go long if it says bearish?
Oh, well, if it says bearish, then you go short. Yeah. Sorry, I didn't look at that.
Yeah, you said that you would buy a call, but
yeah, if it said bullish, I would buy a call. I just didn't look at that word. So let me go back to the 10-year ones. And just show you the process. So what you do is you select the ones you like, and then you add it to their neural network. So hold on, we could come up here. Okay, so let's just do these few. So down here, so these are checked. Let's say let's do anything up to 4.5 or higher. So 4, 5, okay, 4, 4, 9 is close. That's close. All right, let's do those. And I'm going to say add to step 2. Now step 2. Oh, let me try that again. I have some old ones here. Let me add to step 2. Oh shoot, I have to recheck them again. Step 2. Okay. So now once they're in step 2, you can it has a neural network, and I don't know the details of it, but they basically compare, and this only works if you're close to the open date. And so what's today, the 19th? So none of these are close. So if I say calculate, it won't do anything because it needs to be at least 3 to 2 days up to the starting date. What it'll do, it'll look at how the market is setting up now and relative to how the market set up in the past. And if the setups were similar, then you would get a probability of high or low. It's basically looking at how if the market's setting up in similar ways that it's set up in the past, going into the open date. So, dog.
So maybe you can select some other trades which are closer, even if they're not fives. If you go back to step 1 and select some other ones which are closer, or actually change your criteria so it's closer, so we can see how they
Yeah,
go.
let's pick one that's closer. So if I can sort by open date. So what's Monday's the 21st? Let's just look at the 21st, see what's coming up. So this is what I usually do. I go through what's coming up. So here's 21st. I mean, a lot of bearish. None of them are really green. Find a green one. There's one for 22nd. Let's see if that will add to step 2.
Does green mean bullish or does it mean a high score?
This is a high score, yeah. Get rid of all these guys. All right,
Do
so
you
I've got that
understand
one.
the mechanisms or the calculations for the score?
So I'm just going to calculate the probability of this one. Even on just one, it takes a little while. Again, average profit 2%. I would usually avoid this because it's not worth my time if I'm shooting for 2%. And so what it did is said the probability is low, meaning the probability that you get, I don't know. I don't like low. I don't know exactly what it means. I just don't like low. I usually look for high, or I think another one is very high. So I want green, which is a good score, and I want high probability setups.
Yeah, so this is a corporate bond. So yeah, corporate bonds aren't going to deviate very much here coming up.
And then what's interesting though is they have a future. Now futures are very cyclical and very seasonal. So it kind of works better on futures. I've seen some, I haven't traded the futures much. I've done a couple. I remember one trade on soybean oil. I never trade soybean oil, but it picked out a trend in soybean oil last year around the spring, and it nailed it. It was amazing how good it worked. So here's for futures. So we have the S&P Mini, June 1 to June 18th was supposed to be bullish. How'd we do? I think we did pretty good, right? Until 18th, that was Thursday. So the month, we were good on the month. Another good Russell, mid caps. So a lot of equity futures, good signals for June. And then you can see the correlated, you know, the first couple of weeks of the month, these are all pretty good. Let's see here.
So you should see, I would think you should see this trade, which is coming up, which is this bearish signal after the 18th of June. I just wondered if it actually shows up in this trade miner.
So here's a bearish on gas. Dow, it's picking up the first 2 weeks of June were good. I don't see anything bearish on equities. See Dow, look for bearish. These are all bearish.
How did you switch from stocks to futures? I missed that. Is that?
So it's a different program.
Oh, I see.
Different. They're two different executable programs. Yeah, and then they have one for Forex as well.
Oh.
It's all included. They're all three are included.
I see.
So yeah.
Cool. Very cool.
And what are the other steps to step 3 and 4?
Step 3 is like you can add it to your portfolio, and if you want to watch it in here, you could actually, it might be nice to paper trade, you know, just adding to your portfolio here and tracking them before you put real money into it. I don't know. I never use this tab, counting alerts. I don't use anything else, but just the first 2 steps I use.
So we should all get together and split the cost of this.
Yeah.
Yeah.
Can you log in from 2 different computers at the same time?
No, you can only use it on one machine at a time, which is why I have it running on what I call my trading server, because that's where I don't want it on any laptop or desktop. I want it to be available anywhere in the cloud. So.
Oh, so you set up a cloud computing and then you load it up there?
Yeah, I have a server that I run a lot of my trading stuff on. So. Yeah,
Well,
so that's how
if you run across any, Scott, that are like super tasty, like near 100% probability, forward them to the group or to me, and I will put them on the group calendar. If you think there's something that's got a high probability of success there.
But maybe this is your trade, your Tesla trade, Ken. So buy Tesla May 24th, exit June 21st.
No, that one expired in July, I think.
Because
24th,
it's
yeah.
catching that same
It was,
that same trend.
Yeah, but it's the same entity, and it's even more refined. It says basically it's 100% win ratio from that. The one that I did was more of a optimized for profit. So this is, anytime you see 100% gain like that, that's I'm going to record. I'm recording the session, so I'm going to go back and put this one into the the calendar there, the excess profits calendar. That's an excellent. Looks like an excellent trade. Cool.
Why?
Scott, could you present sometime your cloud computing, how you set that up and how you use it?
I mean, it's more about Windows. I mean, I actually have a physical server running at a co-location facility in Santa Margarita, and I drive that. It's a physical machine. It's not very cloudy. It's my own cloud.
Okay.
So I want to get off of that and move to like AWS or Azure or something like that. 'Cause that's what I do for work. Everything at work I do is on Azure.
that's a little bit more involved. I run several servers on Amazon.
When hard drives crash or power supplies crash at 2 a.m., I got to get up and
Right,
schlep down there.
right. And depending on the size, it probably costs you, I don't know, about $100 a month. But I have a comment to make. I am really interested in this seasonal stuff, but I think there's more to be done on seasonals. I think once you find out what the trade is, what you really want to do, put through some analysis and see, is it really happening, or is it just anomaly this year? So as a result of it, is anybody interested in a seasonal trade subgroup? So what I'll do is I just put my email address in the trading subgroup, and I'd like to take this a little further, and then you not only look at the trades but analyze them and see which ones are good, which ones are worthy of taking, maybe what kind of strategies we do for taking them, discuss different strategies, that kind of stuff. So is anyone interested in being a part of that group?
Yeah.
Yeah.
Okay.
Well, I've been doing it. So and that's what you see with the group calendar here. So
Well,
yeah.
Ken, what I'd like to do is a little different than what you're doing.
Yeah, I understand, but I'm just saying. So,
yeah. Please just send me an email, and I'll do that. When the breakout session, I actually discussed how I did the SPY seasonal trade, and I think it's different than how most people would have done it. Okay.
SPY seasonal trade. Which one?
Well, there's a short seasonal trade for next week.
Oh yeah. Mm-hmm.
Okay.
But it's one of the things that we find is that everybody has a different comfort level, a different style, right? One person will do futures, another person will do options, another person will do spreads, another person will do BBICs, another person will do the stocks. So everybody's got a little different style. What do they feel comfortable with, right?
Well, we can take a little poll. I actually did that with options, but I used a strategy where, if it goes down, you make money. If it goes up, you still make money. So I bet that's a slightly different strategy than what most people are used to. But we can discuss those. Somebody from the breakout room that we had can chime in and say if this was helpful for you or not.
Got it.
Yeah.
So here I just exported the results to a spreadsheet.
Yeah.
So you
Excellent.
can do that if you want. Just select all the rows and select copy, and then paste.
Very good, Scott. This is excellent.
Can you spare that spreadsheet with us?
Yeah, it's just SPY, but do you want?
Put a link. Just put a link in the chat room. So
Do you want me to just SPY, or do you want to do like all of June, everything in June?
everything in June will be great, but
And
SPY is good too.
Yeah, and the high scores, of course, those were not so good scores that you.
Yeah.
And of course, the highest possible. If you got the 100%ers, then can you rate it so that the 100%ers are the ones that are really, really cool.
I'll just do everything in June.
Yeah.
And then, now I have noticed that sometimes when I run a scan, you know, like I might run a scan at the beginning of the month, okay, here's my setups for the month. And then later in the month, like maybe the 20th, I'll run it again and the scan results are different. And I don't know if that's because it's including the trades that have already happened in June this year, or so sometimes it seems like it changes, which worries me a little.
So what I would be doing as a correlation is I would take out one of these scans and then I would do I've got some optimization software in TradeStation, and I would actually run it and see if it correlates with this. And if it does, I would be all over it like flies on a pile of.
That's right. You can back test the suggested trades in TradeStation.
Yeah.
I think there's something there, but it requires maybe an extra step, just the seasonal stuff.
So if you read the book Long-Term Secrets to Short-Term Trading by Larry Williams, this is where he focused most of his effort in that book, was basically doing seasonal trades.
That's what Jake Bernstein does too. I recently attended a webinar by him. He talked a lot about seasonals.
Yeah. 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 All right. All right. Cool. You want to return it to me, Scott, or do you have something else?
Hey, Scott, can you paste the links into the chat room too?
Yeah, I'll share this doc and put it in the chat.
Okay, thank you.
Very cool. Thank you very much, Scott.
Yes.
For people, do you like these Zoom meetings? Should they continue Zoom, or should we go to live in person, or are either okay, or can we do both? So if you guys could fill this in, that would be greatly appreciated, so I can get an idea of how we can, how we can proceed from here. Very interesting. Wow. You can see this updated, right? Being updated?
Yeah.
Okay, cool. Wow. So people like the Zoom meetings, or both. Okay, this is good to know. I personally prefer it myself. I don't have to set up an entire facility, and I don't know if there's any restrictions, but we're starting to open up the campuses here in my senior community, and we could do much more stuff available. Interesting. Okay, thanks. That helps, guys. I will try to see if I can maintain the Zoom meetings if at all possible. Wow. Cool. All right. Very interesting. Very interesting. Okay. So one of the other things I wanted to do, you see that, so 72% said let's keep on going with the shared meetings here. So we will try to do that if at all possible, or if we have both, we'll try to see if we can broadcast it. Thanks. Okay, so share results. Okay, so that should be done. All right, so this last section, we've got about 20 minutes. I was going to try to set up some conversations or discussion as to what can be done for the next meeting or profitability. But just by the way, the Tesla trade, I took the Tesla trade. I used options and I got a 20% gain. I will be on Monday. I will be entering the SPY ETF, or actually options on SPX. You can see that after hours, the SPY continued going down here. So I am anticipating that it should keep going down, but I will be doing both futures as well as options on SPY. With my futures, I can actually set it up so that if it goes down, it will trigger a short. If it goes up, it'll trigger a long. So it will sit there, and it can sit there and oscillate back and forth. But as long as there's some direction in the market, it will take that direction and go with it. How will you be trading that? Any ideas, or will you be trading the SPY? I think, Jack, you said you already talked about the SPY trade for Friday/Monday.
Yeah, I'm already in.
Already in. You're already short.
Yes.
And how did you do that? What did you do to you do options, futures?
Yeah, I actually did that with a back ratio that I went in detail with the group. To sum it up, it's a two-step trade. One is the entry. Sorry, I have a wide wing entry for a little credit. And the second step is the adjustment. So, you know, the tent is, it's, well, without getting into a whole lot of detail, because there's a lot to talk about, you know, I make money if the stock goes down, but I also make money if I'm wrong and SPY goes up. So if you handle it right, it's a win-win trade.
Okay. Well, that would be interesting. So for the next meeting, could you give a quick synopsis presentation on that? That would be a very fascinating thing to see, how you've implemented that. I understand back ratio spreads, but most people may not understand those here. But I do not see how you've implemented that.
Yeah, it's not the standard tasty trade back ratio spread. It's a little different.
Okay, that would be interesting. Could you present that next time?
Sure.
That'd be great.
Sure.
Cool. All right. Let's see. Are there any other comments, suggestions, things that are popping up? Scott, if you could give us like 2 or 3 things that would be that you popped out of those seasonal trades for the next month, that would really be cool. The juicy ones, right?
Right now, or like later on?
It's up to you. I mean, if you have it quickly available, because we've only got 15 minutes here or less. You can supply it next, or just send me an email and we'll put it on the calendar or something.
I like to use the neural network part, but all the ones I'm looking at are for later this month, so I can't run the neural network scan until I get closer to the actual open date. A lot of these are set up for the end of the month, 28th, 29th, 30th, which is interesting.
Okay. All right, I'd have to. So one of the things that Scott did is he gave us the this link to all of these. Let's see, where is it?
Seasonal setup. So what I did is I created the spreadsheet. I did some formatting, and then on the top I put a screenshot of the scan, just so you know what exactly was scanned. So month of June, 90%, 5 to 21 days, and 10 years of history.
Yeah, that'd be great. Let's see if we can make some money on that. That's cool. It's one of the
That's really good. There are what, over 500 trades in here?
Yeah, not all of them are good.
Yeah.
It takes some work. I wouldn't do it personally. I wouldn't do anything with a lower than a 4.
Okay.
And then I would also look at the, well, yeah, you don't have the tool. I like to look at the graph below it to show actually the results of each year.
Yeah.
To make sure there's not some huge outlier that's skewing the results.
Yeah.
That it's consistent. I'm looking for some consistency.
Well, if you wanna join the work group, send me an email. We'll set up a session, and then we can go through like 10 or 20 stocks and kind of look at them and I can do a quick analysis of it too, and decide, you know, which ones are worthy of pursuing and which ones are not.
Your
That will be
email-
cool.
email
It'll
the
be
chat.
interesting to see what comes out of that. That's a great idea.
Yeah.
Excellent. Every time we meet people, I always learn something new. This is just amazing. The
Yeah.
amount of talent on these meetings, outstanding. So, all right. Any others? Any other discussion? Any others? So okay, so we have to take a look at all these stocks here. Wow, there's a quite a number of them here.
Hey, Ken.
Yeah.
Just about the meeting and the format and keeping the Zoom meeting. I think it's one of the strengths of having the two groups together, San Diego and Orange County. It's like I've heard Scott's presentation before on seasonal trades, and I think actually a couple different times. But yeah, I just think it's a strength that we can all meet together.
Right. Just okay. Just to meet. Yeah.
Yeah, I actually gave a talk on seasonal trades in the Orange County meeting, the one that Brian runs, or used to run, at that wonderful site in Newport Beach.
Yeah.
I have to find it. Anyway, I'll have to look for it.
A lot has changed since then, Scott.
Yeah. Now that we have the Zoom and we have the ability to record it and share it with on YouTube, I'll tell you, when I go back through these things and edit them down, I learn even more stuff. I mean, I've got so many windows open right now to see all these things, try to just to coordinate everything that's going on. But to get the rerun is fabulous, absolutely fabulous. So I really do appreciate the recordings of this. So anyway.
Yeah, so in September of 2019, I did a seasonality presentation. Looking on the site here, excess profits.
Okay.
There's some slides there.
2019.
September 28th.
Scott, I think the main issue that I and several other traders I know have faced with seasonality trades is, you know, you do some, maybe you make some money on some, but you also lose money on some of the others, right? So the question is, how can we filter the seasonal trades for a better response, for a better result? I get seasonals, that's I started futures trading till I lost big, okay? So this kind of stuff happens, and usually the stops are fairly large. I don't know how the stops are here, but yeah, stops are usually large, and you get hit in a couple of big stops, it wipes out all the earnings and then some. So we need an extra process on top of that, and that's
So
what will make a difference, I think.
Yeah, I think what I found is that you shouldn't use the seasonals as just that's the whole trade. Just buy it on the open date and sell on the close date, or sell if it's split bearish. But use it as a regime filter, kind of like what Ken was showing with his K stochastics. Is if it says it's bullish between these 3 weeks, I only want to take long signals.
Right.
Yeah.
Trade your system long only.
But here's the thing. SPY is on a seasonal down trade next week, right?
Right.
Yeah.
So one would think that we should be looking at bearish trades, not bullish trades,
Correct.
right?
Yeah. Exactly.
Yeah.
So you could do something as simple as like a moving average crossover, but only to the short side intraday.
Right.
And only take shorts.
Right.
Well, you also
Or
need to look and
Something
see
more sophisticated than that. But
how the stock is positioning, right?
say it again. How the
What do you mean?
How is it positioning? I mean, you can look at the chart and say, okay, the trend is up, the trend is down. I see a trigger here. I see an entry here. No, this is not supporting a move in that direction. Now we can tell all that stuff by looking at the charts.
Right.
So, but the seasonals tell us where it's probably going to go. The forward, well, I don't know if it's forward looking, but it's based on history. We have a tendency of where it will probably go.
Right.
Yeah.
Versus this is what it's done in the last 10 days.
Right.
Right.
So we have a little forward indicator, which is rare.
Yeah.
What would be interesting to know, but I don't know if the platform can show that, is to see if you have a bullish signal while the market was in a downtrend and it still made profit. You know what I mean? It will show the trade as a bullish, while in fact, by other indicators, it was actually bearish and it still made money.
Yeah, you could have that, but those are usually anomalies. Steve actually did a good presentation a while back where he actually had a nice strategy. I don't remember what the strategy was, but he was actually able to make money consistently, had a positive expectancy even in a down market, because it does these little dead cat bounces on the way down. And yeah, he was able to capture some of those little pops.
Which Steve?
Steve Alexander?
Oh,
So I think it just depends on your trading system. I'm just saying the way I wanted to and intended to use seasonals was just use it as a regime filter. And so whatever system I have, that would dictate whether I'm bullish or bearish only within that system.
Right.
And the stocks would be based on the system. I just a little report on our 30-minute breakout. One thing I shared is there's a book. I just shared a little book report. I just started reading this week. It's called Entries and Exits, Confessions of an, what is it called? Confessions of an Algo Trader. Confessions of a Champion Trader by Kevin Davey. And it's just a book of, he's a TradeStation. He's a longtime algo trader. He's won several trading championships. He writes an algo trading column in TAS&C magazine. And I've known him just personally for years through various forums and sites. And it's just a book of entry rules and exit rules you might want to consider looking at. And they're not full-blown systems, but if you're looking to build systems or want to, evaluate trading strategies, he lists 41 entries and exits that you can play with. And he gives the code, the TradeStation code, and then he also describes it in English in case you don't use TradeStation.
I see Jennifer. That looks like Jennifer just posted it to the chat.
Yeah.
Cool.
So
Thanks, Jen.
It's kind of fun. I'm like a third of the way through it, and I was just kind of reading it over lunch and just reading all these different entry and exit things you can test and play with. So.
Oh, I think I read that book. Guys, the rules are just so oversimplified. I don't know if they
Yeah,
work
they're
well or not.
like I said, they're very simple. They're not full-blown trading systems that you want to just plug in and make and run on real money, but they can give you kind of a starting point or ideas to test later and advance or enhance later.
Yeah, I read that book. I did not think that the strategies were usable.
Okay. Hey, Scott mentioned another one that's coming up. So one of the things is we've got this quadruple witching hour, and Scott was mentioning this past week to me that this recurs quarterly, right, Scott? Got another one happening in September that should be even more reliable than the one that we have right now in June.
Yeah, I think what you're referring to, I was saying that the week after options expiration week or options expiration in the third month of the quarter is usually the worst trading weeks of the year. In fact, the one in September is absolutely the worst, the most bearish week of the year.
So,
and March is pretty bad too.
So load up your ammunition, people, and try to shoot for, keep something ready for September there. We'll have to see how it goes. I'm anxious to see how some of the stuff that Scott's doing there, or Jack, with the seasonality, especially in SPY. I feel really, really good. If I see seasonality configurations in SPY, I'm ready to back up the truck and load it up, because you can really do some really nice stuff. There's plenty of liquidity there on the options market. So yeah,
I'm trying to find the article. I'm going to give the credit to Rob Hanna, who it's called here. I'll put it in the chat. He wrote a link or an article about the weakest week, and just that September week is just awful. But he looks at all the months. I think, and another one. Basically, the theme is so March, was it March, June, September? I don't know about December. December you have the Santa Claus rally, but at least those 3 are pretty bad the week after options expiration, which is starting Monday.
Got it. Got it. All right. Okay, so what are you going to be doing on Monday, Scott?
We're putting on a BBIC. The VIX is climbing, so I don't know. I'm a little. We'll get more
Yeah.
premium, or it's going to keep going up. I don't know.
Bill, what's your take on that? All of us are trying to look at the VIX. If the VIX climbs, that's usually one of the possible problems that we see with the BBIC.
Well, maybe I just shouldn't ignore the seasonals and just sell call spreads and not full blown condors.
Yeah.
It's a bearish week, right?
Yeah, right now. Bill?
Oh, that's an idea, or bias the iron condor.
Yeah. Long
Yeah.
puts, short calls. Yeah.
Yeah. All right. Okay. Well, any others? Any other people? Jack, you got a trade you're going to be putting on Monday? Catherine?
No, I put on the SPY,
Short?
SPY short. What else do I have? I have boom. I have it's a cap trade. It's a tight cap trade. Doing a butterfly at the low put around 425. I have a Citicorp. Russell. What do I have? I have some puts on Russell, doing a back ratio trade.
So when you do the puts on Russell, do you notice the liquidity on those? We looked at some of those things, and the liquidity just seems to be scary thin to me.
Well, I'm using IWM, and I don't have any issues getting filled.
Oh, okay, on IWM. Okay, not on the RUT.
Not on the RUT, no.
I see.
RUT gets filled too. I mean, these are, but 2, 3 to 7 day trades. So, but I must admit, I don't do much RUT stuff. It's usually IWM.
Got it.
Yeah.
All right. Well, if I really appreciate everybody showing up. I hope you guys enjoyed the breakout rooms, and I hope they were fruitful. I hope that Jack and Scott recorded them. I will keep my fingers crossed that everything worked out. And if you have any feedback on these things, please let me know. I am trying to make this as fruitful and profitable as possible. So let me know, people, and I will see you in about a month.
Just a short comment. I put in the chat the link to that book, the Davy book. It's a free copy, PDF copy.
Oh yeah, that's a good thing. Yes, I got that one too. Very, very nice of you to share that link. Thank you.
Okay, good presentation, folks.
Guys, great. Thanks, guys. I appreciate it.
Thanks, everyone.
All righty.
Thank you. Thank you.